Today's highlights. The Fed's dovish tone has shaken the market, with the probability of a rate cut soaring to 81%, igniting the entire market. The Sharpe ratio is approaching the zero axis. Is this a signal to buy the dip? The regulatory authorities have officially denied the rumor about the first Dogecoin ETF hitting its limit. Is Dogecoin spring finally coming? MicroStrategy is holding on despite a 43% drop, and Tom Lee has stepped in to say that this is a necessary ordeal on the road to success. Tuesday, November 25th. This is the BTB Chinese channel. Where's the face change? I'm Michael. Let's take a look at the most important data from the past 24 hours in the crypto world. First, let's look at the latest data release, which has jolted the market wide awake. What is it? The probability that the Federal Reserve will cut interest rates by 25 basis points in February was originally hovering at a very low 25 to 30%, but in the past couple of days, it has skyrocketed like a rocket to 81%. Meanwhile, the probability of keeping rates unchanged has dropped to 18%, so this has instantly ignited the overall market sentiment. Global risk assets immediately followed suit with a strong rally in US stocks, and Bitcoin rebounded from a low of 80,000 to around 89,000, surging more than 10% in a single day. So it's as if the market has switched to a new script, a new logic. This reversal actually reveals a very harsh reality. Macro expectations are truly the trump card in the market. Sentiment always moves a step ahead of the fundamentals. So during periods of high volatility, it's not about whose fundamentals are better, but about who seizes expectations first. Short-term fluctuations will continue, but judging from the price action, those wild swings up and down are already slowing down. The medium to long-term structure still remains relatively strong. So as long as the rate-cutting cycle begins and liquidity returns, that will be the driving force for both crypto and US stocks. The next round of the market is basically about getting on board with the trend. Right now, what the market fears most isn't bad news. What the market really fears is a sudden reversal of expectations. The most powerful force isn't the fundamentals, but rather the underlying reason for liquidity returning. Recently, the long liquidations in Bitcoin have been absolutely insane. It's like being sent straight back to the PTSD of the year FTX collapsed. This shows that in this market round, leverage has piled up to the point where it's almost bursting the market. The sharp drop on October 11th only liquidated 9,307 Bitcoins. Everyone thought that was probably enough, the liquidation should be over. But that was not the case. The real heavy action happened in mid-November. On the 14th, a whopping 10,430 Bitcoins were liquidated in one go. Then, on the 21st, another blow came with 9,450 Bitcoins wiped out. In the short term, the scale was even more brutal than on the day FTX collapsed. So what's even more ironic is that every time the price drops, there's always a crowd rushing in to buy the dip and gamble. But what happens? The market slaps them right back and they end up becoming the new fuel for liquidations. So this round of price increases is basically propped up by futures and leverage. That means as soon as sentiment turns, the whole market is like a house of cards. Give it a little push and it all comes crashing down. Although this wave of liquidations has cleared out quite a bit of old leverage, rest assured, new leverage will keep piling in at any moment. In the short term, the risk of a sudden downward spike hasn't disappeared at all. Looking at a longer time frame, this round of deleveraging is actually necessary. For the market to go further and remain stable, it can't rely on this kind of high-stakes, long or short gambling with leverage. What really matters are people who are genuinely willing to put up money to buy the actual asset. Alright, let's take another look at Bitcoin's Sharpe ratio, which has recently been in free fall, almost returning to the zero line. What does this mean? The Sharpe ratio, in a nutshell, tells you whether the risk you're taking is really worth the return you're getting right now. So what does it mean when it drops near the zero line? It means the market is a complete mess, huge volatility, and returns are shrinking. But what's strange is that the long-term odds have actually changed. Let's look at history. In 2019, 2020, and 2022, every time the Sharpe ratio dropped into the zero line range. After that, Bitcoin always experienced months of strong rallies. So, while we can't say it's hit bottom yet, it's definitely at a point where things are very fragile in the short term, but opportunities are brewing for the long term. In terms of risk, the market will still be chaotic and volatile for a while, and there will still be sudden sharp moves in the short term. As for returns, the lower the Sharpe ratio, the more likely it is that prices will surge even more sharply and directly than they are now. In other words, the risk-adjusted cost-performance ratio. It's more cost-effective. To put it simply and bluntly, when the Sharpe ratio drops this much, it means the market has fully priced in the risks at the bottom, and the opportunities that should come are still slowly accumulating. When the day comes that the Sharpe ratio starts to rise again, it means a new trend for Bitcoin is truly about to awaken. Alright, please give me a like and turn on the notification bell. I'll help you sort through the Web3 world's news that's closest to making money in the next 24 hours. You're also welcome to become a member. From Monday to Friday, I'll give you a wealth password every day so you can experience what it's really like to make money during a bull market. Now, let's look at the news. The US Government Efficiency Office. Everyone knows it as the symbol that Musk once threatened to cut down with a chainsaw, saying he wanted to get rid of Washington's bureaucracy. But now, this office has taken on a bit of dark humor. The director of the U.S. Office of Personnel Management, Scott Cooper, was asked about the situation with the theft, and he responded very calmly and dismissively, tossing out a remark. He said that agency no longer exists. So as you can see, the experts who were once tasked with reshaping the structure of the U.S. government have now quietly vanished without a trace. And what's even more ironic is that the office was officially dissolved, but it seems like they themselves weren't even aware of it.
In response to the news that the Office of Government Efficiency and Innovation had been disbanded, the office replied on the X platform, stating that the information originated from a fake news story by Roasted. They emphasized that just last week they had terminated 78 wasteful contracts, saving $335 million for American taxpayers. The office also stated that they would release their routine Friday update as usual in a few days, implying that the department is still operating normally.
Elon's done a fantastic job. Look, he's sitting right here. And I don't care. I don't need Elon for anything except that I happen to like him. But I'm telling you, this guy did a fantastic job.
Eric Balchunas, a senior ETF analyst at Bloomberg known as the ETF Prophet, stated, "The first spot Dogecoin ETF in the United States has been officially launched by Grayscale with the ticker symbol GDOG. The product management fee is 0.35%, but the first $1 billion in inflows or all funds within the first 3 months after launch will be completely fee-free."
Well, the first thing it tells me is that digital assets are here to stay, and that the digital asset ecosystem is going to be or will have a place in portfolios moving forward. Like you mentioned, I can't say too much about the filings, but we're really excited to be able to bring some of these strategies that we've already managed in European markets.
Or that this department can still exist, can still be established. In my view, this shows that the US government still has a self-correcting mechanism, that it has the ability to purify itself. In other words, you can find opposing forces. For an institution that is becoming increasingly bloated and interconnected, there really needs to be a department to keep it in check. Now, what everyone is more concerned about is, why does Musk have Doge Father written on his shirt and a dog on his hat? On X, he wants to send Doge to the moon, and even the government efficiency department is called DOG, or Dogecoin. So what does this actually mean for Musk, or for the entire Musk ecosystem? This is a question that everyone should really think about. As for whether the government efficiency department exists or not, I don't care. MicroStrategy has recently become a hot topic of conversation. Some people think that if MicroStrategy were to be removed from this key index, something significant might happen. But back when it was added to the index, we didn't see the coin price go up, did we? So now, Bitcoin only dropped by 6%, but MicroStrategy's stock price fell by 43%. Major institutions like JP Morgan are just watching from the sidelines, raising their eyebrows and saying, "See, I told you these treasury companies aren't reliable." But Michael Saylor stepped up and made a bold statement, saying he won't back down, and even posted a photo of himself braving the polar extremes. What he means is, he's telling everyone, brothers, I can handle this. I won't sell a single coin. And Michael Saylor made a bold statement. His exact words were, "Volatility is Satoshi's gift to the faithful." If Bitcoin just obediently went up 2% every month without any volatility, Buffett would have snatched it up long ago. There's nothing wrong with what he said. Thumbs up.
Tom Lee pointed out that the drop in MicroStrategy's stock price is actually a side effect of a successful strategy. Because the SMT2 options chain has extremely high liquidity, it allows institutions to easily use it to hedge billions of dollars in crypto insurance. Meanwhile, native tools like on-chain derivatives lack sufficient depth, making MST2 the pressure valve that absorbs the entire industry's hedging demand. He emphasized that the more MicroStrategy becomes a proxy asset for Bitcoin, the more its stock price is likely to move in sync with the volatility of the crypto market.
So now, MicroStrategy is nothing like the small software company it used to be. What is it doing now? It's converting all those outdated traditional assets like US dollars and US treasuries into Bitcoin, the ultimate currency conversion. Institutions don't dare to buy Bitcoin, right? Retail investors find hoarding coins troublesome, don't they? Then just buy MicroStrategy stock. It's like boarding Michael Saylor's Bitcoin aircraft carrier. It has built a super bridge between traditional finance and Bitcoin, making it easy for anyone to cross over. But the problem is, how could old financial powers like JP Morgan Chase possibly allow their financial empire to shift en masse toward Bitcoin? That's why MicroStrategy has to be suppressed. There's definitely an element of protecting their wealth, their lives, and their empire here. But let's do a thought experiment. Suppose the Trump administration incorporates Bitcoin into the national debt and makes it part of the national strategic reserves. At that point, the so-called financial aircraft carrier would be upgraded to a national flagship. If that happens, how could the traditional financial powers possibly stop this trend? This trend, what could they do about it? There are legends of getting rich overnight here. And there are also carefully scripted scams. This is a dark forest developing in chaos, yet within it lies a lake of hope leading toward the light. The destination of faith is freedom. The endpoint of consensus is equality. This episode of TV will guide you through the fog, help you see the future, and together we'll gradually become wealthier. Hyperliquid's 300 million Hyper tokens. Before unlocking, the former CEO claimed he had already cashed out. Gold is surging ahead while Bitcoin is in an awkward position. Can it really break its all-time high in 2026? So don't be fooled by the recent lull in the overall market, right? In fact, this November, the DEX sector is extremely hot. The data from the DeFi blue chips is very telling. Let's take a look at the daily trading volumes on these platforms, ranging from 28 billion to 60 billion and still climbing. So if you add it up over the month, the top four have achieved a total trading volume of 1 trillion US dollars. 1 trillion. Ladder has $300 billion, Astra is right behind with 289 billion, and Hyperliquid has 259 billion. HKEX also racked up $177 billion, which looks pretty impressive, right? But let me tell you, there's a hidden risk here. Hyperliquid is sitting on a $314 million time bomb. The day it blows up, we'll have quite a show to watch.
According to the data, Hyperliquid will unlock 9.92 million Hype tokens all at once on November 29th, which accounts for 2.66% of the total supply. At the current price, that's about $314 million. Although the scale isn't huge, the fact that the entire batch will be released at once has already made the market nervous. The price of Hype has dropped to $31, down 23% from last month. The controversy was sparked by an open letter from X user Andy, who demanded that the team clarify how core contributors' tokens will be managed before the unlock. Given that the lessons from the venture capital bubble burst are still fresh, the fact that both the team and airdrop users have the right to sell tokens without any explanation is bound to cause panic.
Of course, if the overall market grows by 2028, Hyperlink could be in a very good position. But looking ahead in the short term, when you have $500 million a month in unlocks creating potential selling pressure, and your buyback depends on revenue, which is being undercut by someone offering zero to low fees, then I think, okay, maybe it's time to take some chips off the table.
In Nice's speech, he really didn't hold back at all. He said it's impossible for Hyperliquid to avoid selling pressure, so now there are two camps. One camp, led by Andy, is demanding that the team fully disclose how the core members and key token contributors are storing and managing their tokens, and exactly when the selling pressure will be lifted, everything needs to be laid out clearly. The other camp feels that the team was always supposed to have these tokens anyway. How they handle them is their own business. So for Hyperliquid, the most critical issue right now isn't the token price dropping, but rather the lack of transparency, which could really cause a disconnect. If they don't clearly explain the unlocking schedule, once trust is broken, it's over. Lighter's competitors will definitely seize the entire market share. Recently, anyone who's been watching the market must have noticed the same thing. What's going on? Bitcoin has been stuck circling around 90,000, while gold, on the other hand, has been shooting up like it's on steroids. So Alden came right out and made this point clear. He said the days of the Fed tightening its belt are almost over. From here on, there will gradually be more money, just not a massive flood like in 2020. Logically speaking, right? Bitcoin is supposed to be a barometer of liquidity, right? It should be the first to go up. But right now, it feels like someone hit the pause button. It's stuck in this really awkward range, just bouncing back and forth. So this situation where Bitcoin is stagnant while gold is soaring, it just looks absurd. Actually, this is just telling you that the macro trend is changing. It's just that the market is still in a buffering period, so we can't just stare blankly at the coin price. It's time to start using our brains.
According to analysis by Lynn Alden, Bitcoin's weakness is not surprising. Liquidity continues to tighten. The diversion of funds into the AI sector, the strong siphoning effect of gold, and the ebbing momentum of sovereign Bitcoin reserves are all jointly suppressing market sentiment. At the same time, Bitcoin is experiencing cyclical sell-offs by early participants. Meanwhile, insufficient retail demand is further amplifying this weakness.
I do expect that, in 2026, we'll be back into the six figures, and whether it's 2026 or 2027, I think we'll be seeing all-time highs, most likely.
In contrast to Bitcoin's sluggishness, gold has been pushed up to $4,000 per ounce as central banks around the world continue to increase their holdings to avoid asset freezes, with retail investors following suit. This round of market activity once again proves that the more chaotic the market, the greater the need for assets that can serve as a stabilizing force.
Actually, everyone needs to understand that nothing has changed on the macro level. There are still only 21 million Bitcoins. Trump's policies on Bitcoin and crypto assets remain consistently supportive. As for companies like MicroStrategy, it's normal market behavior for them to liquidate some of their premium holdings. Right now, you need to keep an eye on two things: interest rates and regulation. Don't get caught off guard. So for regular investors, we just need to focus on one thing: staying steady. The short-term weakness in Bitcoin is only temporary, but once liquidity returns, there's still a good chance it could hit six figures in 2026. As for gold, even though it's shining bright right now, if you chase it at these high levels, you might end up in misery while others are celebrating. The market keeps switching between hot and cold. That's just normal market fluctuation. We can't let our emotions lead us around. Hold on tight to your core assets, and when the wind comes, you'll naturally benefit. Just don't mess around blindly, and you'll be fine. All right, let's take a look.
Over in the US, more than 300 families affected by the Hamas attacks have directly filed a lawsuit against Binance in the federal court of North Dakota. The reason is straightforward. From 2017 to 2023, you allowed accounts related to Hamas to freely move funds in and out. Trump stirred things up on social media again, saying he plans to visit China next April, and even declared that relations will only get better and better. He revealed that this phone call was a follow-up to the very successful meeting they had in South Korea, meaning the conversation went well, and cooperation will keep moving forward. Spain's Renter Fabenco has obtained a MiCA license issued by the regulatory authority CNMV, officially becoming the fourth bank in the country legally allowed to buy, sell, and custody crypto assets. Even News reported a bizarre robbery in St. Petersburg. A man walked into a cryptocurrency exchange with a fake hand grenade, threatening to detonate it and commit rape. But as soon as he started putting on a show, the police immediately pinned him down. The grenade was fake, but the arrest was real. Truly, the shortest-lived robbery attempt ever. FitVoice has some new updates. They've officially announced on X that the Dogecoin ETF is coming. The code is actually pretty interesting. BWO means that in the future, anyone who wants to invest for fun can buy a legitimate ETF. Dogecoin fans are probably already wagging their tails in excitement.
Let me ask everyone a question. Do you have toxic people around you? You know, those who drag you down and bring negative energy, people who are just dead weight in your life. You might be surprised to find that if you clear these people out, your life will feel a lot less heavy, and that sinking feeling won't be so exhausting. The most frightening thing about toxic people isn't their toxicity itself, but how they drain your energy, make you doubt your own worth, lower your expectations, and dull your edge. That's why we have to wake up and tell ourselves we need to clear out the toxic people and negative emotions from our lives. These people are obstacles in your life. They make you weaker. So to make your life more efficient, you need to learn to distance yourself from toxic people. I hope that starting today, you put yourself in a higher position so that everyone who comes close to you must be worthy of you. If you understood, please give a like. That's all for today's program. Here, we've included a summary of our membership benefits. I hope that in this bull market, you can gradually become wealthier together with everyone. See you tomorrow.